The healthcare insurance sector is in complete panic mode. The giant UNH is down over 50% in just 3 months, Elevance also down 50%, Centene down 71% in 2 years, Molina down 60%. And OSCR, a stock many of you have asked about, dropped 40% last month alone. Is this a buying opportunity or a falling knife trap? And which of these companies is the best buy? Quick spoiler, I believe it's a big opportunity. I took my profit from HIMS and Elf Trades and I just opened a $20,000 position on one of these beaten down companies. Which one? Keep watching the video to find out. A couple of notes before we begin. First, this is not financial advice. I'm just sharing how I see the market and what I'm doing with my own money. Second, I'm not a big fan of the insurance business model. The more claim they deny, the more money they make. I believe healthcare should be a right and not a for-profit enterprise. That said, this sector is down so much, we have to analyze if it's worth investing, at least while we hope that America will provide a better healthcare system for its citizens in the future. So, what happened to the healthcare sector? The fear started in April. While everybody was panicking over tariff, UnitedHealthcare was near its all-time high. Then they reported earnings and warned that it was going to be a tough year, lowering guidance due to higher than anticipated medical costs, and the stock crashed down 22%. Then in May, the news got worse. Not only the CEO of UnitedHealthcare stepped down, but it was revealed that the Department of Justice is investigating the company. Another 30% drop. To top it off, the current US administration is changing policies, cutting the Obamacare, with the result that fewer people will be able to afford insurance, and the sector went lower. In June, it was Centene's turn to withdraw its guidance for the year, read 40% in 1 day. The reason, same as everyone else, higher medical costs compared to the forecast. To understand this, we need to quickly talk about the medical loss ratio, or MLR. It's basically the inverse of the gross margins. It's the percentage of money insurers pay out for medical claims. Usually, they target an MLR of 81–82%, and they are left with 18–19% gross margins to run the operations and make profit. Now, oops! They discovered they miscalculated. This year, the medical loss ratio is going to be 87–88%. And the 6% difference might not sound like much, but in the low-margin insurance business is the difference between a profit and a loss. OSCR, for example, just changes its guidance to 200–300 million lost for the year, right when they were expected to become 200–300 million profitable. The other insurers faces losses so big they are even afraid to disclose them. So there is no denying these are very bad news. And the marketing is panicking for 3 very good reasons. 1. No more Obamacare, no benefits, no incentives. 2. These companies will lose money this year. 3. The change in MLR show that they're incompetent at predicting their own core expenses. Now, first level thinking is, bad news, let's sell. And this is what the market is doing, this is what investors are doing. The healthcare sector versus the S&P 500 is at all-time lows. As you might know, I am a contrarian investor. When others panic, I see opportunity. These news are bad, but in my opinion, the market is overreacting. These issues are transitory. Insurances will raise price next year, trying to bring the MLR back to 80–81%. The political landscape is also temporary. We will have new election, a new government, a new healthcare agenda in 3 years, but actually next month the current government might change their mind after losing votes. So I applied the value ratio to the whole sector. UNH, Centene, Elevance, Molina, Humana, and of course OSCR. Every company. Please research carefully if you decide to invest because are all quite risky stocks. But just looking at the formula and the pure numbers, the cheapest is Centene CNC. It's trading at $28, the same price it was 10 years ago, while its revenues has grown 800%. As a price-to-sell ratio under 0.1 is just crazy cheap. In my opinion, Centene is wrongly priced and get a value ratio of 6. This company could go to $100 if they were fully valued. Elevance and Molina are also extremely cheap with value ratios under 10. Honestly, I believe no matter which one of those you pick, in the coming years, in the next 2-3 years, you will beat the S&P 500. But I don't want to wait 3 years, and I'm a bit of a gambler. I want to be more aggressive, so I decided to enter OSCR Health. Fundamentally, it's a little bit more expensive than the others, but it's still very cheap compared to the rest of the market, with a value ratio of 14 and a fair price of $25. The reason I bought OSCR is simple. Centene is the best value, but I believe OSCR is the best trade and is way more volatile. Interest in this company has a crazy, massive positive momentum. Check the search volume for OSCR stock, never been so high. The trading volume lately is also massive. The recent interest in this company is insane. Even if it costs a little bit more than Centene, I believe OSCR could double much faster. I bought 1,500 shares at 13.50, right when it touched this trend line. I'm already up a bit, but the stock is so volatile that everything could change tomorrow. I'm gonna hold for a while and see if I can get that quick double. Before I go, a quick word on UnitedHealthcare. Under $300, it's not expensive. I believe long-term investor will be fine and profit. But I like it less than the others because on top of the sector issues, they have their own internal problems. The management turnover and the DOJ investigations. This makes it even more risky and less compelling at this valuation. That's it for today. I hope you enjoyed the video. The next one will be about the Figma IPO. Thank you for watching Adri Economics. Please like and subscribe. Peace out.